Welcome to Brooks Realty Group. I'm Nolan Brooks, broker of Brooks Realty Group. Whether you're buying, selling, or investing, we're here to guide you every step of the way.
And I'm Madison Alexander. I'm a licensed agent here in the state of Missouri. If you want to go ahead and subscribe to our channel, if you want to see more tips, tours, and real estate thoughts. Today's topic is going to be how does one get into real estate? So I'm sure a lot of our listeners probably want to know, what is the home buying process actually like? So Nolan, if you want to take it from there, what's the process?
So a lot of people, especially you see on social media now, people are like, it's unaffordable to buy a house. I can't possibly buy a house. I can't afford the down payment.
Right.
There are a lot of really wonderful programs out there. So you have rural development loans, you have FHA loans,
Absolutely.
You have, for veterans, you have the VA home loan. And on some of these, you have a down payment of $0.
Yeah.
So I believe the rural development loan and the VA home loan, they have $0 down payment. So if you're worried about coming up with a down payment, go talk to a lender.
Absolutely.
You would be shocked at how many people qualify for 0% down, because a lot of people don't live in rural communities or areas that you wouldn't even think qualifies as rural, but they qualify for rural development loans.
Right.
And those have a 0% down. And then if you're a veteran, you have a 0% down option with the VA home loan. And there's a myth out there, and it must have been true in my dad's generation, because it's not true now, and it hasn't been true for a long time. But a lot of people think that you can only get one VA home loan, and that's just not true. So I've personally bought 3 houses using my VA home loan benefit. So if you get in, you talk to a lender, get them what I call the rule of 2. 2 months pay stubs, 2 years taxes, and 2 months worth of your bank statements.
Right.
Any lender, you provide them with that information, they're going to take you very seriously.
Absolutely. I have a question with the VA home loan. So you said
Sure.
that it used to be a thing that you could only use it like once. So my dad, he's in the process of moving right now, and in order for him to have bought the house here, he had to get rid of his other house, and he said it was because of his VA. So you can use it multiple times, but it has to be one at a time kind of thing?
No, it's not even that.
I'll have to let my dad know.
So with a VA home loan, you have a maximum eligibility.
Okay.
That the VA will insure, basically. So a lot of people think that a VA home loan comes from the VA. That's not how the program works. So a private lender will issue you a loan for qualify you for a loan.
Okay.
And the Veteran Administration will insure that loan up to a certain amount. So I don't know what the current amount is, but it varies on zip code. So even if I told you what the zip code in Warrensburg, Missouri is, it wouldn't be relevant to a zip code in Alaska or New York or California.
Right.
So, but you have a cap on what the VA will insure. So you can even buy a home that's more expensive than that.
Okay.
But the VA will only insure up to that cap, and then anything above that cap won't be insured by the VA. But so I have 3 homes that I've purchased and I still own on a VA home loan. So the way you're able to do that is when you use a VA home loan, and this is very important, you have to move into it.
Right.
So my wife and I bought our first home, which was a duplex.
Okay.
We moved in one side, rented out the other. We had a daughter, and then we stayed there while our daughter was a baby, and then we had our son, and when we found out she was pregnant with our son, we bought a second home.
Okay. That
was a single family home because she was tired of sharing walls. So then we moved into the second home. Then my in-laws came, and it turns out my father-in-law will not share a bathroom with someone, so I had to buy another house.
Interesting.
So that he could have his own bathroom.
Good son-in-law there.
Apparently. And so, but that was over several years. So
Right.
I had time in each house because I did move into it and live there.
Gotcha.
But I didn't have to sell it. And as long as the total amount that I still owed was less than my what the cap was, I could continue to buy more properties.
Okay.
I have heard that there is a limit to the number of properties you can have. I don't know what that would be right now, though. I'd have to look that up.
Yeah. And then back to like down payments, because I think that's probably most people's concern is that down payment. I know it would be mine. So I know that there are some down payment assistance programs, so in case you do have to get a conventional loan or FHA loans, you still have 3.5% down usually. Can you get 0% down with an FHA loan?
So I believe an FHA is 3.5% down, something like that.
Yeah.
But with a rural development, you can get 0%. So a conventional loan is usually between
20, right?
Usually 20, but I have heard, I have not seen a program, but I've heard rumors of as low as 5%. But if you're doing less than 20% down, you're going to have something called PMI, primary mortgage insurance.
Okay.
And so that insurance doesn't protect your property and it doesn't protect you. It protects the bank. It insures your loan. So it's essentially an insurance premium that you're paying to an insurance company so that if you default on the property, then the bank is not going to lose any money.
Okay.
So that money that you pay towards your PMI each month does not go towards your down payment. It doesn't go towards your interest. It's just to protect the bank. Now, a lot of people will say, well, that's a terrible deal. It's money thrown away. That's one way of looking at it. Another way of looking at it is that if you didn't have that ability, if you didn't have PMI out there, you wouldn't be able to get in control of $100,000, $200,000, $300,000, $400,000 property because you own that property when you buy it. Even if you're paying that insurance or you're making your payment, you own it. So the reason it's so important to know that you own that property and not the bank, the bank only owns the note on the property, which is not the same as owning the property. Because if the value of the property goes up and the bank owned the property, that means you would be splitting the equity between you and the bank. So think of it this way. If I buy a $200,000 house
Okay.
and I owe $200,000 on it, if I were a co-owner with the bank, when it went up by, let's say, $10,000, when I sold it, the bank would have a claim to that half that $10,000 or $5,000.
Gotcha.
But that's not how it works. You own that entire property. You have to pay that mortgage off first. But whatever it's paid off, you pay that off out of the proceeds. But anything above that is yours.
Gotcha.
Right? So when you're calculating interest on something like that, the appreciation of the interest that you're earning isn't based on what you bought it at or what you paid.
Right.
Like the cash investment that you have. It's not based on the cash that you put in. It's based on the value of the property. So if you earn, let's say you pay $10,000 to buy a property, and that it's a $200,000 property, and it goes up 2%.
Right.
Well, that's $4,000 of equity that just you now own. So your return on investment is 40%
Gotcha.
for that year. Does that make sense?
Yeah, I'm trying.
So, and we're really into the investment side. I kind of way got off on,
That's okay.
on the weeds, but I really get passionate about this stuff.
Yeah, but so let's say you get an FHA loan,
Right.
you got 3.5% down. Now I've heard there are down payment assistance programs that can even help you pay for that 3.5% down.
Right. So there's a in Missouri, it's the First Place grant, I think is what it's called.
Okay.
And with the First Place grant, it's a grant for up to 3.75% of the home loan. So
Okay.
These numbers change. So always talk to your lender. Your lender's going to be the subject matter expert, not the guy on YouTube, right? So, and many states have something very similar. Now, the caveat to that is if you get that grant, that you're required to live in the property for a certain amount of time.
Right.
And in Missouri, the last time I did one of these deals, the standard was you had to live there for 10 years, and then the full amount was forgiven.
Oh, wow.
But if it's your home, that's not a big deal.
Right.
And then if you moved out before the 10-year mark, you had to pay back a prorated amount of the amount that you were given. So it's still a great deal.
Yeah.
Now,
because it gives you time to save.
yeah. Well, also because when you sell, you presumably would have accumulated equity because the value of the house generally goes up. So you wouldn't be paying it out of your pocket; you'd be paying it out of the purchase price of the property.
That makes sense.
So, a lot of lenders don't enjoy doing those programs because there's a lot of additional boxes they have to check, and it's kind of a pain in their tuchus to do the extra paperwork. But those programs do exist, and they are out there. And trust me, if you need the help, take advantage of it. And,
absolutely.
And there are absolutely lenders out there that will be happy to help you find that and do that paperwork.
Do the paperwork.
Yeah. And that's what your lender is going to do. They're going to take care of you. They're going to walk you through the paperwork side.
Yeah, definitely get in touch with a good lender. If you don't know any good lenders, always ask whatever real estate agent you're working with, or talk to us. We will help you find a lender.
Right.
But okay, so then back to I guess real estate investing. We kind of touched on that a minute ago. What would be a good way for someone to get into real estate investing? I guess maybe kind of go over the main couple of ways you go about investing, and then what would be a good way for somebody to kind of get started.
So to get into real estate investing, like I said, there's lots of different ways.
Yeah.
So the way I got into real estate investing, the general term is called house hacking. Mm-hmm. So my wife and I purchased a duplex. Because I'm a veteran, I qualified for a 0% down loan. Right. So I was only in and out of my pocket for $500 for the home inspection, and then I negotiated the seller to pay half of my closing fees. Right.
Awesome.
So all in, I was probably in it for $2,000.
Nice.
So with that scenario, I qualify for these retail loan programs, these subsidized, these government loan programs, because I lived in the property. That's key. You have to live in the property if you're going to use these programs.
Right.
If you don't live in the property, that's called mortgage fraud, and you will go to jail. Yeah. So don't do that.
Don't do
that's
mortgage fraud.
Bad. Mortgage fraud is bad, people. So we house hacked. So we had a basement unit, and we lived in the upstairs unit, right? Another way to do a house hack is, let's say you buy a house that's a single unit, and you live in one room, but then you have roommates in other rooms that pay you rent. That's another way to get into it at that beginner low level if you're struggling, right? There are other ways where you can get more creative with financing. Mm-hmm. Generally, not always, but generally, you're going to either need more money or backing or experience in real estate investment already to really take advantage of those. There are ways where you can do like a fix and buy a property for cheap and then finance the repair value, the cost of repairs into that, and you end up like me and a friend of mine just did that on a duplex south of town here, and all in we'll have the place fully renovated and rented, and we won't have actually paid any cash out of pocket by the time we're done.
Wow.
But part of the reason that we were able to do that was because we both have very good credit, and because I'm in the real estate industry, so I have a bit more credibility with lenders. And but a lot of beginning investors don't necessarily have those resources.
Right.
So you have to get a little bit more creative, which is house hacking. One thing to keep in mind if you're doing that, though, is a consumer loan, a mortgage, covers you for a single family home all the way up to a fourplex.
Right.
So my dad, when we had our kids, my mom and dad decided to move to our hometown, or move to where me and my family live.
Right.
And I convinced them to buy a fourplex. So he was under the impression that you could only ever use your VA home loan once, so he didn't want to waste it, so he never used it. Oh. He's 70.
He's never used it.
Yeah, he just never used it because he was like, well, I don't want to waste it, right? He could have used it a dozen times, and he just didn't.
Gosh.
But on all consumer loans and conventional loans, they go up to a fourplex. So when they moved up here, I convinced him to buy a fourplex. He lived in one unit, and then we rented out the other three.
Yeah,
so
that's awesome.
They could go home to their home outside of Fort Leonard Wood and have a place to stay, and it wouldn't be draining their resources in retirement. They would actually be contributing to them, and they'd be making money.
That makes sense. That's awesome.
Yeah. So you can be very creative. You can be very creative in this industry, especially once you get into commercial, and private financing. You get into that stuff. That's a whole nother video. That's a whole nother topic. But it gets really cool, really interesting stuff if you open that up and you get into that can of worms.
Right, and we'll talk more about investing in the next video after this one. So to, I guess, get away from investing, so we don't spoil too much in the next video, I was wanting to kind of talk about, just in case we have some future real estate agents in the audience, how would one get into the real estate industry as an agent, as a broker, or anything in between?
So we're licensed in the state of Missouri. So everything I'm about to say is from the caveat is it's all in the state of Missouri, right? So you'll need to investigate what the rules and expectations are in your area. The best resource that I can direct you to is probably going to be your local brokers.
Definitely. Every
broker in your town is probably hiring, because real estate brokers are always hiring new agents.
Yeah.
That's just a truism. It's just the way it is. If you live in this area, give me a call. But talk to your local brokers. Talk to multiple brokers.
Yeah.
Because each broker is going to have a different way of doing it, have an emphasis on different things within their office. Each office has its own little culture. But in general, and specifically for Missouri, the first thing you're going to need to do is take a real estate exam. I believe it's 48 hours is the basic real estate exam. Your basic real estate class, pardon.
Right.
Not exam.
The exam is 48 hours.
No.
Fun.
Yeah.
That'd be crazy.
Yeah.
Oh my God. I might not be here right now.
Yeah, absolutely. I definitely would not be. But you have to take a real estate course in the state of Missouri. It's 48 hours. Then from there, you take your real estate exam.
Yes.
I forget the company that it provides it, but you have to sign up online, and then you go to their test location, and you have to take it on site. You can't have your cell phone. You have to empty your pockets, all that stuff.
Yeah.
Once you pass the test, you have to apply to your state's real estate commission. In Missouri, it's called the Missouri Real Estate Commission. We're very creative in Missouri.
Super.
And then they'll have different requirements. So, for instance, in Missouri, you're going to have to get fingerprinted. You're going to have a background check. You're going to have to pay an application fee. You're going to have to submit all that.
Right.
And then they'll issue you a real estate license. So, also in the state of Missouri, your real estate license has to be kept under a broker.
Yeah. And
this varies a lot more from state to state, the requirements to become a broker. In the state of Missouri, it's two years. You have to have 2 years of real estate, be licensed for 2 years. But once you're licensed as a broker, you can open your own brokerage, and you're not
Right.
confined under it under a company. You can do your own thing. It's exciting. It is a lot of work, absolutely, but
Yeah.
it's very fulfilling.
Well, and we've been working on kind of a new agent timeline. We've got like a Google
Mm-hmm.
Doc we've been working on. So we can link that into the YouTube video. So if you want to
Absolutely.
check that out later on, we'll leave a link in there. And it gives you the whole breakdown and also costs, too.
Yeah.
We threw that in there. That way you can know what your initial investment is going to be. One thing to keep in mind, what I've been telling myself is like, you sell your first house, you pay back your investment, and then you can kind of decide from there. It's not, you don't have to feel stuck, so don't worry about that. But, yeah, so how long have you been a broker for?
So I've been a broker since 2021, so
Okay.
that's 4 years now. A little over, just a hair over 4 years now. And, it's a lot of fun. It's a lot of stress. But I really enjoy coaching. So
Yeah.
before I started with real estate, I was a fencing coach.
Right.
Well, before that, I was in the infantry. But I loved training young soldiers to be infantrymen. I loved teaching people how to fence. I just really, really enjoyed teaching in general and mentoring people. And so for me, that's what drew me to becoming a broker.
Yeah.
Was the opportunity to train and mentor people and teach them the lessons that I had to learn the hard way, so they wouldn't have to learn it the hard way. So.
That's one thing you want to make sure when you are looking for brokerages, is make sure you know who your broker is, because if you have a broker that makes you feel stupid for asking questions or anything like that, that is not the kind of person that you want mentoring you. So just make sure that you're checking in on that. And what people say is you're interviewing the brokers; they're not interviewing you when you're an agent. But I think that pretty much wraps up the video. I don't know. Do you have anything else to say?
No, I think that's a great place to stop this video.
Okay,
so,
awesome. Well, guys, thank you for watching. And remember, whether you're a first-time home buyer or an experienced investor, we've got the knowledge and the experience to guide you every step of the way. I'm Madison Alexander.
I'm Nolan Brooks. And remember, our contact information is below. Don't forget to like and subscribe and hit that notification bell. Until next time, Nolan Brooks.
Thank you, guys.